Have you ever just stared at a stock chart and felt totally, completely lost? Well, if that's you, you're in exactly the right place. Today, we're going to decode support and resistance, and these are probably the two most important lines you can ever draw on a chart. And this isn't just some abstract theory, no. This is about building a real, reliable map, so you can start navigating the market with a whole lot more confidence. So, here's our game plan. First, we're going to completely change how you look at the market's journey. Then, we'll get into the key destinations and paths. After that, we'll get our hands dirty and actually draw the map. We'll also cover what happens when those paths suddenly change, and finally, we'll pull it all together into a master plan. Let's get going. All right, so why does any of this even matter? Well, it's because every single trader, I don't care if you're a total beginner or a seasoned pro, you face this one single dilemma, and it can literally make or break your entire strategy. And that question is this: when do you get in and when do you get out? I mean, think about it. If you get this right, you've got a strategy. But if you get it wrong, you're really just gambling, aren't you? The tools we're talking about today are designed to answer that exact question. You see, the key is to just shift how you see the chart. Forget all those chaotic squiggly lines for a second. Instead, I want you to picture the market like a bus route. The price is just a bus, traveling from one station to the next. Your job isn't to guess every little turn in the road. It's just to know where the bus stops are. And those stations, those bus stops we just mentioned, well, they have names. In the trading world, we call them support and resistance. These are the destinations and paths that are going to guide our entire journey. So let's meet our two main characters here. You've got support, that's kind of like the bus stop at the bottom of the hill. It's the floor, where all the buyers are just lining up, waiting to get on. And then you have resistance. That's the stop at the top, the ceiling, where the sellers are looking to cash in their tickets and get off. Let's dig into support for a second. Why does this even work? Well, it all comes down to demand. Think of it like a bargain zone. As the price drops down to this level, all the buyers who are sitting on the sidelines suddenly see a great deal and they jump in. That demand pushes the price right back up. It's like a psychological floor for the market. And resistance? You guessed it, it's the total opposite. It's a price ceiling. This is where sellers who bought down at the floor are now thinking, hey, it's time to take some profits. So as the price gets close, they start selling, and that sudden flood of supply can just overwhelm the buyers, causing the price to turn right back around. It's kind of like the end of the line for that particular upward move. Now, this is probably the most important thing to remember. Please don't think of these as perfect magic lines. They're not. They are zones. They are battlegrounds where buyers and sellers are literally fighting it out. Your goal isn't to find the exact price to the penny. It's to identify these high-probability areas where the action happens. Okay, so we got what these stations are, but how in the world do we actually find them? All right, let's get practical. It's time to start drawing our map right on the charts. You know, it's actually simpler than you might think. To find your support, your floor, just look for at least two major low points where the price came down, stopped, and bounced back up. Then connect them with a line. And to find your resistance, the ceiling, you just do the exact same thing, but for the highs. Find at least two peaks where the price got rejected and connect those. That's it. And here's a little pro tip for you. The more times a level gets tested and holds, the stronger and more significant it becomes. I mean, a floor that has held the price up 5 different times, that's not a floor, that's a fortress. A ceiling that has held firm again and again is a major, major obstacle. Every test just confirms that this battleground is the real deal. Okay, now for the really cool part. This is a super powerful concept. These levels, they're not set in stone. The map can actually change right before your eyes. And honestly, understanding this is what separates the average trader from a great one. I want you to think of these levels like chameleons. They can completely change their function. A really strong ceiling that was stopping the price from going any higher can, once it's broken, become a brand new solid floor that now prevents the price from falling. So here's how that whole role reversal plays out. Stage 1, the ceiling does its job, pushes the price back down. Stage 2, the buyers finally gather enough strength and they break through. But stage 3, now this is the critical part. Very often, the price will come back down to retest that old ceiling, which now acts as a new floor, before taking off again. This is such a classic pattern, you have to watch for it. And of course, this works both ways. If a critical floor, that support level, breaks, don't be at all surprised to see it turn into the new ceiling, preventing the price from ever getting back up easily.
This role reversal is a constant dynamic dance in the market. All right, we have our map, we know where the bus stops are, we even know that they can swap roles. So how do we take all of this and turn it into a simple, actionable strategy? Let's build the master plan. Here are your simple rules of the road. Rule number 1, your job is to travel from one station to the next. That means you're looking to buy near support and you're looking to sell near resistance. Rule number 2, stay away from that no man's land in the middle. That's where you're most likely to get chopped up. And rule number 3, always be on the lookout for role reversals. A broken ceiling can become your new best friend, your new entry point. The whole goal is just to ride the bus from the floor to the ceiling. I love this quote because it really just captures the entire mindset perfectly. You're not trying to be a hero and predict every little wiggle and jiggle. No, you're just identifying the major stations and riding along for the journey. You let the market do all the hard work. So there you have it, support and resistance. It's so much more than just a tool. It's a map to the market psychology. It shows you where the high probability paths are, where the floors are, and where the ceilings are. So now you've got the map, and you've got the rules of the road. The only question left is, are you ready to plan your next journey?